pitch, understanding the property, understanding that there could be challenges to obtaining financing. And again, you can bring in someone that can help with that, right? So, you find the right buyer that, you're able to help, put the deal together. So Steve, why don't you go through that one example that I'm talking about?
Yeah, you're exactly right. And good morning, everybody, and thanks for having me. So as Mark mentioned, the house was in disrepair for lack of a better word, holes in the walls. The kitchen was just in terrible shape, water stains all over. And the buyers had every intention of doing a very large renovation once they purchased the property, um, but big bank, not to be named, couldn't do it based on the appraisal because the appraisal, a bank will lend on houses that are marketable, habitable, and safe. And this was really none of those at the time, which they were a little surprised that they couldn't get traditional financing. But I got a call, and at the end of the day, I won't, belabor this for too long, but the buyer, at the end of the day, the buyer ended up really having to do a much larger renovation than they expected from a dollar standpoint. I think they expected somewhere around 150,000, and the renovation cost ended up being about 350,000 to allow them to do what they wanted. So they would have been stuck in a very uncomfortable situation to the extent that if they were able to close with traditional financing, they wouldn't have had the money to do what they wanted to bring the house up to where it needed to be. So thankfully, yeah, I got the call. The buyers had no idea that this type of financing existed. The only downside was obviously, if you can imagine, it took a while to engage the contractor, get all that together because specs and plans and all that are needed in order to process the mortgage application because we are doing it based on the renovations that are to take place. So while that process took a little while to consummate, the buyer was extremely pleased that that he's now able to do what they want to do with the house. They're not exhausting all of their funds, which they would have needed to had they closed with traditional financing. And, for lack of a better word, really saved the deal because this wasn't closing any other way.
Hey, Steve, what was the purchase price on that?
The purchase price was somewhere in the nines, 915, 970, if I remember
And
correctly.
and we lent how much?
And we ended up lending, so we ended up lending 1,040,000, but important for everybody on here to keep in mind that the buyer was putting down 20% based on the purchase price. So we were lending 300 plus thousand on the renovation amount. And the house and the appraisal based on the based on the house, existing house plus the renovations was 1,003,000 prior to, putting a nail in the wall.
Right. So again, you could see how and this is a combination of um, a collateral issue on this one in particular, and also, being creative. And creative is not even the right word. It's just, using the available resources that are out there to help put a transaction together that might not have happened. Because if they hadn't gotten to Steve and they only were speaking to lenders that didn't have these types of options, the seller would have been stuck saying, hey, this is an all cash deal, which would have limited the buyer pool and potentially, obviously, would have taken much longer maybe to find a buyer and then probably lowered the price as well. So, there's sort of there's like a domino effect here. When you don't find the right resources and the right products and have the right tools available. Okay. All right. So just
Thank you,
again,
Steve.
yeah,
Yep.
go ahead,
Nope, I
Jane.
was just thanking Steve.
Oh, okay.
Thank
Hey,
you.
so again, so I kind of just summarized, I guess, a little bit of what today was about. Today is about, for us personally, we consider ourselves a solution-based lender. Um, it doesn't mean that we can do everything, 100% of the time, but typically, if there is a solution, we're going to be able to find one to help solidify financing for somebody that might not be able to get it in other avenues. Again, sometimes it's the institution, sometimes it's the expertise of the individual, but don't walk away from a potential transaction just because somebody has told your potential buyer or it's a seller with a collateral issue, that they can't get financing. There is potentially, there's potentially a solution for that. We're here to help with that. We're here to answer questions about that. But and it just doesn't fall under what I just exposed, the idea, the topics I went over. I mean, condo tells we have solutions for. I know those can always be a challenge. Bridge loans. We typically don't see as many used now, just because somebody lists their property, it usually sells pretty quickly. But we're going to get to a time where a bridge loan, might be necessary. Just a quick note on that. We do up to $250,000, 90% loan to value on the current property. Obviously, they have to qualify, covering for all three: the mortgage on the new property, the bridge loan, and their current debt on their existing home. But we also have to be doing the financing for the new purchase as well. And the last thing I want to say that I think is really relevant, obviously, we're waiting for the announcement in now August about the NAR settlement and where that's going to go. One of the advantages we have of being a consumer bank is we have a few consumer products. And one of the ones we use is to, like I said, we're really a mortgage company. So we use our consumer products to help add benefit to our mortgage products. We offer a $50,000 consumer loan, unsecured consumer loan. Now, again, you have to be a mortgage customer to
How
be able to
much?
use it.
How much was
50
it?
50,000.
So what is that, like for just like renovations or something, or
Well, yeah,
closing costs?
yeah, exactly. So
Okay.
it's unsecured, you have to be a mortgage customer. So I'll give you just a couple of examples, and then where really it's can benefit all of you, depending on, how far, this settlement goes, and, what the rules around it will be. But again, like Jamie, you said, if somebody, let's say, they're putting down 10%, and they don't want to utilize the rest of their funds because they want to do a little bit of renovation. They want to buy furniture, whatever it is that they want to do, they can take up to $50,000 unsecured. Okay, it's an installment loan. And the piece that we've gone out to market with, we've cleared it with our regulators, is that we will also allow for it to cover 3% of the purchase price for a buyer's broker's commission. Okay, so going into any transaction, and again, they have to qualify covering it as well, and in most cases they will. But depending on how the settlement goes, if the buyer's truly going to be responsible at some point to pay for the buyer's commission, sometimes even if they're putting 20% down, and with all the closing costs we have in New York, they don't want to deplete any more of their assets. Because look, I'm a big believer in everybody needs their own representation. Um, for a buyer to go into a property or go into a negotiation on a property and they're only dealing with the selling agent, there's nobody that has the buyer's best interest at heart. Okay. Obviously their attorney will, but I'm a big believer of buyers agents. So, this is something that will allow um, a a buyer who might not have the funds and the means to pay a buyer's broker. It will allow them to at least obtain financing to help with that. So just something how we, separate ourselves a little bit in some of the things that we do. So Jamie, I'll stop there. I'm not even sure what time it is. Oh, we're almost at an hour.
It's
So I'll take any questions, anything
yeah.
else you want me to mention?
Uh, no, I think you know, I think that most they going to the chat. I think there were like two questions there.
I'm sorry, yeah, I lost you there. You
When,
faded out for
how
a second.
long? I think there were a couple questions on the chat. But I have a question while you're looking at that. What's the time frame that people should start planning if they know that their clients are going to get financing? How long should everything take right now, would you say?
I mean, it's going to depend on the loan. Um, but listen, I mean, any of your buyers, if you start working, the day you start working with them, they should at least start setting up what their financing is going to look like. Because and you should encourage them to provide documents to sometimes, we can do full credit approvals as opposed to just a pre-approval letter prior to finding a property, which also puts them in a better stance when it comes to negotiating. You make pretty much make almost, pretty an all cash offer. But typically, if we have a cooperative client and they provide everything that we need in a timely fashion, it takes a couple of weeks to get approved. I mean, it can be less, so I'm probably just kind of, ballparking it. Sometimes less, sometimes more, depending on how complicated the finances are for the particular borrower, but, no more than that. So as I go through some of these questions, I see, are there any countries you cannot work with? Yes. So we do have an ineligible list, as you can imagine, Russia, Iran, countries that, obviously we have, there are some concerns with, and I have a whole list of them. So if you are working with a foreign buyer, just let me know and we can take a look at I can take a look at the list and cross-reference it. Okay. Um, what's your view on rate levels for fixed and arm mortgage products? If the Fed will reduce a quarter point, say another quarter point before the end of the year. So here's what I will say about what the Fed does, how it impacts us, and how it doesn't impact us. The day the Fed makes a change, doesn't change our mortgage rates by that. Mortgage rates are determined by the bond markets, and that is a moving target and sometimes a volatile market every single day. What happens is those markets trade on what's anticipated and what will happen. So throughout my entire career, when the Fed makes a change that is expected, it's usually already built into the rates. Okay. Um, so it's we'll see it ahead of time. So, based on some of the the inflationary data that's come out recently, the economic data, we've seen rates trend down a little bit because now the anticipation is the Fed will most likely, I mean, there was a survey that said, 100% they were going to lower a quarter in September, but we'll see. Right? Other data can come out and it could shift it in another direction. So, but I would say the projection now is that we are going to see lower rates by the end of the year. And I'm not saying it's going to be hugely significantly lower rates, but moving in the right direction. What I will say is I think now, because people are still buying. We personally had a very busy April, May, June. And I think what happened is people have gotten accustomed to where the rates are, assuming that's affordable, right? They find a property that's within their price range. And they can, because there's a lot of buyers that kind of got priced out because they can't afford the payments right now. But now people are confident if they find a property that they like, and this I've spoken to people about it, they see a property like they're willing to take the rate that is now because with the anticipation and the expectation that over the next couple of years rates will be significantly lower, we will never see them where they were after the pandemic or during the pandemic. But if the rates come down to the mid fives, they know that they can refinance it. So they're willing to, try and take advantage of it now. All right. Do we allow construction loans or bridge loans on DTS props? DTS?
What's DTS?
I'm not sure what
Oh,
DTS is.
Delaware Trust, Delaware Trust, I think, like 1031s maybe? Is that what DTS
Well,
is?
the bridge
Delaware Trust statute, maybe, something like that.
Yeah, I'm gonna, we'd have to check into that, but I'm going to say most likely no. Okay. Um, what is considered good credit? I have a retired borrower that always has mid sevens and had bad years. Is now in the mid sixes, has 100% equity in the house, 2 million. So, again, when we're talking about certain types of financing, the mid sixes is fine. It could impact their rate a little bit, but they can get financing. And again, it depends on what kind of financing. I would say if they're looking for a non-conforming loan, cash out from one of the major institutions, you're probably looking that they need to have a 720, 700, 720, 740, depending on the lender. But there are solutions if they need to access the funds. And sometimes people do. They have taxes they have to pay. They have whatever the reason is, they need to access the fund. So it is something that can be done possibly. What does a lender do with an office building they have to foreclose on? Do they keep it or sell it? If they sell it, if they keep it maintained. So, you know, we don't really deal in office buildings. You know, we're more residential properties. So that's tough for me to answer. Generally on a foreclosure, I would think, you know, there's a lot of people involved on these major commercial buildings that, you know, where the landlord is handing back the keys because, you know, what's happening in that area is those are mostly balloon payment loans. So they get to a point where they have to refinance it. And, you know, where the rates are right now for those types of properties, the property just can't sustain itself. It's going to be a net loss. They don't have the equity in it that they used to because those properties have not appreciated in the same way, you know, with the higher vacancy rate. But again, I'm not an expert in this area, so that would be something to ask more of a commercial lender. Is a renovation loan applicable
All
to
right,
an
I think
H?
we get,
Yep, I'm on
nope,
the
go ahead
last
and answer
question.
that. This will be the last
Yeah.
question. Yeah, exactly.
Is a renovation loan applicable to an HDFC co-op? It's an exception for us to do a renovation loan on a co-op. I'm not saying we couldn't do it, but then again, remember on all co-ops, unless it's a sponsor, unless you're buying from a sponsor or it's a conduct, you have to get the financing approved by the co-op. So would the co-op allow for a renovation loan that could potentially be higher than the actual purchase price, but lower than the estimated future value? So would a co-op actually approve that? That's a tricky question. Okay, so that would be case by case based on a co-op. And in most cases, I would say they would not approve that. They would want to see that somebody has the funds to be able to do the renovations on their own and still have the reserves required that the co-op, you know, would like to see. So Jamie, hand it back to you.
All right. All right. Listen, can everyone please sign out in the chat for me so that I can have a record that you stayed here? And Mark, I'll send you a list of everybody that was on here so that you could send them maybe your information or the packet that you had there and just
Right.
touch base with the audience.
Mhm.
And I might be sending, if you want to stay on, anyone that wants to stay on and listen can. I just want to ask Mark a question right now. If you want to sign off, you're welcome to sign off. Mark, when you talked about the financing foreign nationals, what do they have to show in order to qualify? Are you looking at assets in these other countries?
So we're looking at assets. So if we're doing it as a second home, we need to get income information. Now that can be done.
What if it's the scenario of somebody from China, kid is going to NYU and they're buying an apartment and no one's a citizen?
So again, it depends how we structure. If we do it as a second home, we could do it both ways for any foreign national. It depends on what information they can get to us. And if we do it as the investor option, do the market rents, will it qualify them for the carrying costs? But typically, if we do it as a second home, they need to get us a letter from their employer in English of what they earn. If they're self-employed, we get either their equivalent of tax returns or their equivalent of a CPA letter. Okay. They have to move the funds into the US for the down payment and for closing costs and the required reserves prior to being cleared to close. That's the tricky part. Okay. Typically what I've noticed in the few that I've done, they've had an HSBC account, they've had a Citibank account or a Bank of America account, or forget Bank of America because they're not international. And all they had to do was transfer it into a US account under that same institution. Um, so that's one of sort of the logistical parts that they have to deal with. And it also has to be set up where there's an automatic payment or ACH, we call it, for the mortgage payment out of a US institution. Okay, so they have to set that up. Okay, now the reserves that they put into, yeah, so that's really it.
All right, good.
Okay.
All right, well, thank you so much for being here. This was incredibly informative, and I'm sure everyone appreciates it.
Thanks for having me, Jamie. I
And
always
we'll
appreciate the
definitely
support.
have you on again. All right,
Okay.
and thanks to Steve as well.
Yeah, and
All right,
feel
have a great
better.
day,
All right.
everyone. Take care. Thanks.
Bye-bye.
Thanks. Bye.